you're in charge of probably one of the biggest, markets here in Canada.
For anybody that's looking in Toronto, like Toronto specifically, the numbers are not too terrible. If we look at this, yes, it's red across the board, but in comparison to other markets, Toronto's actually performing quite well. You need to do more research than ever right now. It is, like you just said, it's not okay to be out of touch with what's happening for more than 30 days. I'm probably spending 2 to 3 hours a day doing research right now, because there are so many different variables, so many things going on. People love to say this, and I'm sure if you're watching this video and you read news headlines, there's been a bunch that have come out recently which are like, real estate prices could drop by 20%. But there's also a part of me that's like, right now with Durham, we're hovering around that 20% threshold, and we have just breached that $1 million threshold. So I'm like, is what people have been telling me for the last couple of months, where if prices actually go down by 20%, they're going to hop back in? Like, we're right there.
What's up, everybody? It's Kory MacKinnon here, and I'm taking over the Canadian Real Estate Investors channel this month. And today we have Emma Pace. I'm super looking forward to spending more time with you. It's been a couple months since I last, or maybe a good part of the year since I last hosted the channel, and known you guys for a long time. If people want to find out more about us, you guys can go find me on YouTube. I've got a channel just under my name. I think, Emma, you've got a channel just under your name there.
For sure.
But yeah, I'm really looking forward to you. You're in charge of probably one of the biggest, markets here in Canada. So, and there's always these micro, smaller areas of the GTA. So really looking forward to hearing the numbers and what's going on. It's important that people are staying tuned here, because if you're out of touch for more than a month, I mean, the market's changing so fast these days. I'm learning stuff every single day. I'm constantly on the phone and meetings like this just to stay in touch. So really looking forward to seeing what you have here to talk about today.
Yeah, I'm looking forward to chatting with you, Kory, and I agree with you. I think, like, even before we hop into this video, we go through any of the data. I think one of the things that I really wanted to touch on this month is you need to do more research than ever right now. It is, like you just said, it's not okay to be out of touch with what's happening for more than 30 days. I think more so now than ever, I'm probably spending 2 to 3 hours a day doing research right now, because there are so many different variables, so many things going on. It's like, don't even just take what Kory and I have to say on this particular video for just face value and make a decision. Like, go and do some research. There's so many different variables, things that are affecting the market. And like, you really have to make a very educated decision for yourself and for your family in the next coming months. So please, please, please don't sit by the sidelines. It's a very easy time to just get scared by the media, go into this turtle shell and try and just say, like, let me know when everything's cool, I'll come back out. But the people who are going to actually win long term in a softer market, or a market that we're potentially heading to, I think those are the people that are actively, like, boots on the ground, trying to get better every day to figure out where the opportunities lie for them.
Oh, big time. The media it's really loud lately, and they're literally trying to take your head and just like bend it towards what their narrative is. And it's important. I like what you talked about. We're here to save everybody time. So experts like Emma here to make sure that you don't have to go do all the research yourself, but double check and verify, and then always look for that golden thread. Like, what's the thread that everybody's kind of weaving, and then you can make your own blanket of that and take some action from there.
Totally. Well, do you want to get into the numbers?
Yeah, let's check this out. Let's see how good or bad they are.
All right, so I think for anybody that's looking in Toronto, like Toronto specifically, the numbers are not too terrible. So let's get into that first. So I always like to go through month over month performance, right? Because I think we can look at year over year, and if you only look at that one piece of data, and again, this kind of goes to my earlier point, if you're only looking at one thing, you're not looking at different variables. One piece of data versus several tells a different story often, right? So if you didn't know anything about news headlines or anything like that, and you just took year over year data, you're like, oh man, the market's killing it. So make sure that you're looking at several different factors. Month over month for me is one that I like to watch because it keeps a finger on the pulse on what's happening now, not what happened 12 months ago, right? So if we look at this, yes, it's red across the board, but in comparison to other markets, Toronto's actually performing quite well, right? And so if we look at condo prices went down just shy of 3.5%. So we were at 820 last month. We're at about 793. So we keep hovering in and around that kind of 800K mark for a condo in Toronto, right? Condo towns basically dropped from 950 to 928. Semis made the biggest move to the downside, but they also typically have, I would say, like most volatility in price because they don't have a ton of volume, right? With condos, you have a ton of sales, and so it's usually more stable. And so with semis, there isn't as much volume in terms of how many semis are trading hands. So you're assuming that the price swing or fluctuation is going to be greater on the upside or downside. And so we basically went from 1.5 to 1.425 essentially for average semi price, and then detached went from 1.95 basically to 1.9. So we dropped about 50K there. Right. So overall, if you look at these numbers, you're like, oh, well, yeah, the market's down. But I'm going to show you other segments of the market which have got hit a little bit harder. However, again, to just kind of put this information into scope, a lot of the places that are seeing the larger pullback are the places that saw a drastic run up as a result of COVID and people changing their life, thinking like, hey, man, I'm never going back to work. I never have to go back to the office. And we know, like, I know a ton of people who are now getting stationed 2 days a week minimum downtown. And they're like, dude, I can't afford like gas because gas is so expensive. So I can't keep living in Bowmanville and driving twice a week. Traffic is back. I'm technically not really living the life that I want right now. Concerts are back, restaurants are open. Like, I'm craving that lifestyle. So does it make sense for me to get back downtown? And so I think that, Toronto did not see a drastic run up as a result of COVID. We stabilized for the most part. And I think that's why we're holding so strong in this bit of a downturn. But the areas that saw 70-80% in terms of a run up over the last 2 years, yeah, we're seeing a little bit of a pullback. I don't think it's, I don't want anybody to get hurt in this market, but I don't think it's out of the blue, or I don't think that it's an unhealthy thing to think. Like, we can't continue to have 40% growth year over year. Doesn't make any sense.
And for people that didn't tune into the past couple months there, maybe just like a quick 30 seconds, Emma, was there more red on the chart in the previous update and maybe the update before? Because usually the trends start in the bigger cities first, and then they go out to the smaller tertiary cities after.
Yeah, so Toronto's remained strong. This is the first month where I've seen red across the board, right? It's usually like a little bit of a mix. And so with these next ones that we're going to go through, so Durham, Peel, Halton, and then we'll say Toronto as a whole, these are kind of like the main GTA areas that most people would look at, right? And so the one thing, so just to kind of go through these numbers quickly, Durham went down by 7%, Peel's down by almost 9%, Halton went down by 5.5%, and Toronto as a whole, and this is composite, so this takes into consideration detached, semi, condo towns, and this isn't just detached prices, it's everything together, right? The one thing that I think is very interesting here is we have now on the downside breached that $1 million mark. If you look for Durham, we're at 995, right? And so I'm curious because Durham's kind of been like a little bit of the leader in this horse race, if that's a good analogy, right? It's been the one that's made the biggest move since we've seen kind of a bit of a downturn since February. And so I'm curious to see next month what happens with Durham, and if the fact that it's breached that $1 million threshold and you no longer need the 20% to potentially get back in there, does that encourage purchasers that otherwise only have 7%, 10% down, can they now go back and buy a freehold property in Durham because it's in their affordability range? I don't know. I'm curious to see. Durham's absolutely going to be the one kind of piece of data that I'm looking at going forward, and this is another reason why. So,
and like you mentioned, people can't, like, they got to be working. They're getting called into work. I've actually had some of those conversations too with people. They're like, yeah, after over 2 years, I have to go back to work now 2-3 times a week, and living that far away from the GTA doesn't make as much sense anymore, and things are
Yeah.
back open, and it's going to affect, you know, the parts of the furthest parts of the GTA for sure.
Yeah, and I mean, like, honestly, people really, again, like, I think market sentiment and people's mentality around this um, has a really big impact on overall real estate prices. And I know it's not like the most tangible thing to, you know, we can't just put people's mindset on a piece of paper and look at that, but we also have been like, we have lacked social interaction as a result of COVID. And how many people are like, man, it would be so great to see you at a bar, and I'm so happy, you know, these meetups are happening again, and people are craving that type of lifestyle again, and living in this, you know, isolation that essentially we all have lived in for 2 years isn't the sexiest lifestyle anymore. You know what I mean? Sitting on a patio versus with friends having a beer versus in your backyard by yourself seems a little more fun to me, at least. And so I think that is driving people back into major cities. Like, they're wanting to go to the Jays game. They, you know, they want to go to concerts. We haven't been able to
No,
do
I
that.
was in Burlington this weekend. I was like, you know, I got a hotel room for what was it, Thursday, Friday, and I was going to extend it for the Saturday night. They're like, we're booked out. We'd have to move you to a smaller room. The price has gone up by twice.
Yep.
I was like, because I wanted my family to come down and maybe go to Legoland or go to Science Center or something like that. And then when I started looking at hotels around, I'm like, they're all booked and they're all expensive. I'm like, we'll go some other time during the week, I guess, because it's not ours this weekend. So things are busy and they're definitely booked up.
And then, so, like, you know, the price of that has gone up, as you just mentioned. The price of gas has gone up. So it's like, even if you live in these outer areas, to even spend a weekend coming downtown, it's costing you more money just to kind of do that, right? So you have to take all these things into consideration with where you want to live, what lifestyle you want to live, and that kind of thing. But I think if we look at these areas from, you know, I put February price because that, for the most part, was peak prices in the real estate market. But another main reason why I'm like very much looking at Durham is because so my team does around 12 to 1,500 calls a week right now, right?
Wow.
And so we're getting a lot of boots on the ground data with what people's intentions are moving forward. And so people love to say this, and I'm sure if you're watching this video and you read news headlines, there's been a bunch that have come out recently which are like, real estate prices could drop by 20% and stuff like that, right?
Even more, right? Yeah, the price of home ownership is going to go up by 40% by 2026. I'm like, how does anybody have a crystal ball to 2026?
Absolutely. But there's also a part of me that's like, okay, well, prices are already down by 20%. So what's the starting time frame that you guys are talking about right now, right? And so I keep hearing this, hey, if prices reduced by 20%, I hear this on the phone, and I don't know if that's just a translation of people reading news headlines or whatever it happens to be, or if the news headlines, like, I have no idea what the communication is between the two. However, right now with Durham, we're hovering around that 20% threshold, and we have just breached that $1 million threshold. So I'm like, is what people have been telling me for the last couple of months, where if prices actually go down by 20%, they're going to hop back in. Like, we're right there. We're right at like that testing area. And so I'm curious to see how Durham performs over the next month or two. I mean, I would love to hear your opinion on this too, Kory, but like, I don't think that the summer is going to be favorable for real estate. I think the next time that we see any transitions will probably be like early fall, right? I think we're probably in for a slow next couple of months. So if anybody's looking to make a move, I think it's like, be prepared. Absolutely be prepared, but don't rush to do anything. Like, I don't think that you're going to see some drastic, I could be wrong watching this video back in a couple months, but I don't think we're going to see any drastic moves one way or the other. I think it's going to be a pretty soft market for the summer, personally.
Well, I think people should, I mean, this is very, very great data here on the screen that, you know, hey, Toronto is holding its own like a big ship in the water, and these other ones are getting haircuts. And be like Emma, be like myself. People should be doing research and comparing and really running their numbers. I mean, it's not like a year or 2 or 3 ago where you buy anything, it's going to go up like a rocket ship.
Yeah.
You have to have some skills like people did 10 years ago, 5 years ago. Like, you had to have some foresight and some, like, what's my worst case, likely case, and worst case scenario, and am I prepared to go through all those?
Yeah, totally. So yeah, I mean, I agree with you. I think everyone is like, oh, I'm just going to wait. I'm going to wait. I'm going to wait. Right. I keep hearing that. And it's like, hey, there's actually no problem with you waiting if that's what you want to do. However, if the thought of transacting or, potentially purchasing real estate is, if you have that thought and you're thinking I might do this in the next like 4 to 6 months, like actually get your ducks in a row though. Don't just keep saying, oh, you know what, if the right opportunity presents itself, I'll buy something. You can't just buy something. You need the paperwork. You know what I mean? Like there's a whole process that goes into you actually purchasing. So if you're thinking about this, get yourself in a position where you could pull the trigger. It doesn't mean that you have to, but if the right thing pops up, then you're going to be chasing your tail to get prepared. So my whole thought process right now is like, just be prepared. You don't actually have to do anything. Like if you don't do anything, whatever, you wasted a little bit of time. But if the right thing pops up and you love it and it's AAA quality real estate and you're getting it at a discount and you have job stability and it's like your favorite thing ever and you're going to live there for 25 years, then it's a great deal for you at this time, right? But the most important thing is just being prepared. And I keep hearing people like, I'll talk to the broker, when I find the deal. And I'm like, that's not really how it works. You're moving back.
Definitely. And a lot of people are fearful of what's going on in the market, and I think we should all be mindful of what's going on. But yes. I think it's actually great. There's a lot of action, a lot more things, a lot more interesting listings. I'm talking to realtors. They'll actually take my call, and they're actually saying things like, "Hey, put something on paper. We'll look at it." Or I'm seeing like more VTVs in listings and attention investors, vacant possession, right? Like.
For sure.
Those sellers are getting their ducks in a row. So as a buyer, you'd want to get yours in a row too.
Yeah. And honestly, I've seen, obviously conditions are back, which is nice for everybody to know. Like conditional sales and actually negotiating deals exists right now. But I've also seen several properties in the last 3 weeks that have accepted conditional sales on like the buyer's conditional sale on their property, right? So I think a lot of people are like, but like I don't really know what I want to do. I need to buy and I need to sell, but the market is soft for me selling, but I think it could be a really good opportunity for me to upgrade my lifestyle or get a better house in a better location. And it's like, shoot your shot with the condition of selling your property. And if you don't sell your property, you don't have to buy this house. Like that actually exists in today's market. I've genuinely seen that a couple of times. And so if that's the thing that's holding you back, or if you have one or two, of these, I guess, items in your mind that you're fearful of, and you think, oh, that's never going to work out for me, this is the market to try. Like seriously, people are.
Don't let the last 2 years condition you that we're all, bad people as buyers or ugly or stupid or whatever, like, things we were told when we were kids or whatever. But it's like, we got to wipe all that out, and there's lots of opportunities. Like you said, take a shot. Like you can't be afraid of taking a shot. So
yeah, honestly, if like just shoot your shot in today's market. I don't think there's that many people that are as offended by. I don't like the word lowball offers, but sure, we'll say lowball offers. If you presented a lowball offer in January or February, the conversation would not have been as positive. But just to get something on the table and to open up the lines of communication, it works. Like honestly, it's working in today's market. So, again, we're not saying to go out and rush and buy something. I don't actually think that's the market right now, but I think you need to do more research because there are actually areas of opportunity that are presenting itself. Have probably not been there before. So this is just another, I guess, more intricate breakdown of specific areas in each of these regions. And so what I've done is I've highlighted, as you can see, Toronto stayed relatively strong from February to May. The east side has gone down a little bit, but we're still up quite a bit for west and central. But what I've done is I've gone back and I've just kind of highlighted the areas that have seen the biggest pullback. And so, just to kind of give you guys an idea, we've got 3 in Durham there and then 2 in York region, which are the 2 areas that we've seen like kind of the largest pullback in. So those are contributing to that. But hopefully, if there's anybody that's watching this that are in these particular areas or these particular neighborhoods in each of these regions or cities in each of these regions, hopefully that provides you a little bit more detailed context there.
Now, are some of those regions so small, Emma, that there might be some outliers that are
For
kind of
sure.
skewing the data? But
Yeah.
I guess it's over February, March, April. You know, we got 4 months there, so.
Totally. And I agree with you. I mean, volume actually does count a lot in making a comprehensive kind of analysis as to what's going on. But I think, look at your region as a whole. And then, again, this isn't a market where you just go and paint the entire market with one brush like we've seen in the past, where it's like, the market's appreciating. No, you need to do your research in your own particular neighborhood, because there are certain neighborhoods in Toronto in amazing school districts that are extremely desirable, that are on streets that are considered prestigious streets that very few properties ever pop up on. Those things are still getting multiple offers because it's AAA quality real estate that very rarely comes to the market. So you really do need to look at this specifically for your own particular neighborhood and understand what's going on in the neighborhood that you live in or the neighborhood that you want to live in. It needs to be very, very, very micro in today's market. Like, you have to know streets at this point, right?
Sure.
So if we go into kind of important metrics, months of inventory. So inventory is piling up, right? We saw, February we were under 1 month of inventory, and again, this is a good indicating metric as to kind of like what's happening in the marketplace. So if we have very low months of inventory, that means that things are getting chewed up off the market very quickly. And as we continue to see this rise, so the lower the number, the better it is for sellers. The higher the number, the better it is for buyers, realistically. Now, in a traditional market, if we get over, we'll go here first. If we go over the 3-month mark, we're kind of in a balanced market, and this is 1 week behind. But right now, technically, we are in a balanced market, according to numbers and months of inventory. But if we look at the opposite side of this, and this guy's amazing, by the way, if anybody wants to get like really intricate Toronto stats, this guy Zealand, I don't know if you ever watch this video, thank you, man. I really appreciate the work that you put out every month. But with this particular one, you can see this is sales to new listings. So how many sales are happening in comparison to new listings that are coming to the market? We have about 39%, which constitutes a buyer's market. So if I was to just show you guys this, right, you go, oh, it's a balanced market, it's kind of equal, buyers and sellers have an equal amount of power. I would probably argue in most locations that's not the case. I think, again, it's not equally weighted, and this is why it's really important that you know your particular location. I think for the most part, we're in a buyer's market. In most neighborhoods, I would say we are definitely in a buyer's market. And then this is just kind of another way to look at this, again, by the same guy here. But if we look at numbers in February, we had about 73% of new listings that came to the market that were selling right away, right? That is much higher than the average. It's usually, I think, around like 40 to 50%. If you see these numbers start to go down, this means that the market is weakening because we only have about 30% or 37% of the new listings that are coming to market that are actually selling, right? Cool. And if we have months of inventory here, you can see we had really low months of inventory. So a ton of the inventory getting chewed up, and now we're starting to see it pile up on the marketplace. So things are kind of leveling themselves out, right? This, again, is unsustainable. This is an unsustainable market. A balanced market is amazing, but I actually don't think that this tells the whole picture. I think you need to know what's happening in your particular neighborhood. And with most of them, I would probably argue it's a buyer's market at this point in time.
Yes.
Are you kind of seeing the same thing in your neck of the woods too?
Yeah, I mean, agents need to work a lot harder. Pricing, that list price is so important. Some areas you can, I don't want to say, be cute with it or whatever. But if you don't get that price right, and if you don't get the interest and the showings, and people really got to be running, like, as realtors, I believe you should always be running like the A game plan of staging and great photos and marketing and telling your client, like, hey, if you don't do XYZ, you're not putting your best foot forward, as opposed to like, oh, anything would sell, over the past maybe couple of years, like 6 months ago or whatever.
Totally.
But yeah, people are needed to work, it's more difficult to move inventory. And, but again, if you have an A product that you're selling or an A+ product, you will sell it. And it's just a matter of like, will you get the exact price you're looking for? So.
Totally. And that actually brings me to another really good point. Something that I've seen more recently that I haven't seen in a while. And to your point about marketing properties, because so earlier, agents would just pay for everything. They'd be like, yeah, whatever. I know the listing's going to sell. Listings are the more challenging thing to get. I'll just pay for everything. The general sentiment in the marketplace, that's changed. Like for the most part, contracts are now saying the seller's responsible to pay for everything up front, and then upon a successful sale, we'll reimburse you through commissions. Like that's typically how it works. I have also seen a lot of people now opt to not do that because, again, it's not setting the right expectations. It's like, a couple of months ago, sellers wanted February pricing. They're starting to come around to be like, I guess I'm not going to get February pricing anymore, but I still want you to pony up all of the marketing expenses, and if it doesn't sell, sorry agent, but you're stuck with a bill for however many thousands of dollars it is. And that's also changing. And so I've seen people opting to cut corners now and do virtual staging, because you can do that instead of just leaving the place vacant and empty. And so track those trends in your neighborhood too, to see kind of like how that's happening from a marketing perspective, because I agree with you. I don't think that today, just because the market's softening, means that you need to give it less effort or that it costs less money. You need to be the one person who's actually willing to spend money to get the property sold, because at the end of the day, this is not your house. This is a product on the marketplace that you want somebody else to purchase from you. Sorry to say. Just
That's
is
right. Maybe I've been living under a rock for the past couple of years, but what is digital staging? Is that literally like?
Yeah, so you just take property is completely vacant. You just take professional photos and they go in there after and digitally enhance the image to showcase what it could look like with staging. Cool. Interestingly enough, a couple of years ago, I did a poll to ask just kind of like the general public, do you think that virtual staging is as effective as real staging? And most people actually said that they felt online it was effective. Where I think the challenge lies is you have all these expectations and you're all hyped up about going to see this property and it looks beautiful in photos and you're staring at it before you go. And then you get there and it's kind of like this anticlimactic moment where you're like, oh God, this doesn't look at all like it did in the photos, right? Yeah. So it's kind of like you want to have the in-person experience and the online experience match. And I think there's a big disparity between the two when you do virtual staging, in my opinion.
Yes.
Right. Yeah. So, and then the other thing to your point too, Kory, just about kind of list price and kind of giving it your best effort. This was something that I thought was really, really, really interesting to just kind of bring to everybody's attention. And this is a brand new report that Treb has started to release as of June 3rd. And it is how many properties are actually relisting, right? And so normally, if a property goes to market and it sells immediately, you're not going to have to relist your property. But now this is a really good way to track the sentiment of the market and how many sellers are actually canceling their listing and relisting at a new price, trying different marketing strategies, like how many people are actually selling on the first round. You have some, this is significantly higher than what it typically is. So
yeah, it's over 25%. So that's a big number.
Totally. So having a good strategy is really, really, really important, but it's also important to be realistic and to say, all right, well, man, in Georgina, 40% of people are just not getting what they're looking at for the first round. And I think as the market continues to find like its equilibrium or a little bit more flow, these numbers will probably level out, but people are still trying February strategies in June. And so they're not selling, and then they're dropping by this, and then they're relisting again. And so you probably have multiple relists in there. But the fact that Treb would present this data as a brand new report that has never been reported before shows softening in the market. And I think it just provides more information for sellers to, bring things down to earth a little bit for them, because it's been in their favor for so long.
Yes.
Right.
Yeah, kind of that, there's a portion of investor mindset that that, you and I understand this, but the average person is still going to be wanting, they're much more upset about having something taken away from them versus not getting something, right?
Yeah.
So it's like now the high prices are being taken away from them, which has much bigger impact than like, oh, well, I never, someone who never got it anyways, they're like, okay, not a big deal, right? So, and I'm even curious, I'm looking forward to, being on the show here for some of the smaller cities where there might be more blue collar, people that work in factories or plants, or, are they even more clinging on to that older mindset of like, no, I'm going to get that price. And are we creating yes men and yes women when it comes to realtors and stuff like that?
What I think is interesting to that point, though, if we go here, so I have two charts here, this one and this one, which the blue line shows the resale market and the green line shows the rental market, right? And this is a total amount of like residential listings that are on MLS or active listings for freehold here. What you can see is from June 1st to now, it's kind of flattened out a little bit. And we see even at the end of May, it flattened out a little bit. So we have a couple of weeks where things have been flat. And so I'm actually curious to see, because obviously you can see rental listings are declining drastically. The rental market has skyrocketed in Toronto, which we'll talk about in a bit. But I'm curious to see if sellers are like, if their sentiment is like, hey, I was rushing to get to market because I had this understanding that maybe I was still selling at peak prices. And now I've come to the realization that, hey, that's actually not a reality for me. I'm not panic selling. I'm just going to cancel my listing, or I'm going to put a renter in there because rents are so high and I'll deal with this later. And so I think we're kind of getting to that inflection point where, again, I really do feel end of May to now, mid-June, I'm starting to see sellers really realize and grasp, okay, February is not a real thing anymore, right? And it took a while to get there, but we're finally here. And I think as a result of that, you still have a bunch of people that went to market at the end of March or early April with those February expectations. And now they're coming to 30 to 60 days on market. And they're like, it's not moving. Take it off the market and put a tenant in there. So I'm curious to see how the active inventory levels will be over the next couple of months. Like, we'll kind of see how it goes. But, it's been the first time in a little while where we've seen things flatten off.
Yes. And, for people who only tune in for the first 5 or 10 minutes of this, or they want to skip around the video, you really need to listen to every single word, because Emma's going to be jumping into, these are very interesting stats when it comes to being a renter versus a buyer. And, you need to be looking at things from all different angles. So
yeah,
really
totally.
looking forward to seeing that.
Cool. So I think let's hop into the condo market stuff quickly. And I just thought, and shout out to Jordan at Pre-Condo for presenting this. But I think what's really interesting when we talk about the condo market, I still hear people saying, should I wait and buy pre-construction or should I buy resale, right? And I think when people assume, oh, if I'm going to buy pre-construction, amazing, let's buy it now. We'll wait 5 years. We'll see what happens with rates at that point in time. And if I might as well get rid of it if I don't need it. I don't need a mortgage for the next 5 years, right? But you're still paying future prices for pre-construction. And what I really wanted to showcase, and what Jordan has done an amazing job here with, is just showcasing what the actual profit margin is for these developers, right? And the thing that I was thinking about is there any way for pre-construction to get cheaper, right? If we're seeing a pullback in resale prices and we're looking at two options for condo purchasers, is there like an option for pre-construction to come down? Well, these guys have already paid for the land. So the land value is fixed at that point in time because they've already acquired it, right? Construction costs, you and I both know, Kory, haven't gone down. If anything, they've gone up substantially. Then we look at soft costs, which would be taxes, marketing expenses to get the property sold, commissions, all that kind of stuff. So maybe you actually do have a little bit of leeway here. In comparison to these two, you probably have a little bit more, but I don't think it's a drastic amount. And then lastly, you have government charges, and you can see here the average government charges $160,000 per unit in Toronto. This just went up, so I think there's a very difficult case to be made to say that that's coming down anytime soon. And so if you go, okay, well, 3 of these 4 levers are relatively fixed, how do these guys get any more profit margin? They can't. Like, there's no way for them to do that. So if we have a couple of options, you either pay the, $1,500 to $1,900 a foot, depending on whatever the project is, or you just don't build the project. And so as of last week, they announced that 4,600 units were canceled, right?
Wow.
4,600 pre-con units were canceled because in order for them to continue to develop, they have to sell these projects to get the rest of the financing, right? So it's this kind of whole snowball effect when it comes to developing condos. And then you go, cool, well, if properties are actually selling at $1,600 a foot, do I think that my resale condo in 5 years, when this comes to completion, do I think these guys that paid $1,600 a foot in 2022 are going to sell for $1,300 a foot in 2027? Probably not. I don't think so. They're probably just wait it out. And so I think there's a strong case to be made for, if you can get a deal in the condo market that makes a lot of sense for you. I personally do think either these projects are selling out or they cancel the projects, and then therefore we also have a supply issue in 2027 because now we don't have these projects coming to completion. So I think there's a strong case to be made for condo prices in 5 years from now. And in February it was really difficult to find anything under $1,050 a foot, $1,100 a foot. I'm seeing places sell for $925, $950 a foot. Like, we can get under $1,000 a foot again.
Yeah, that's good value, right? I mean, for people that, sure, you have to look at the age of the building and what's your condo fee going to look like and things of that nature.
Yeah.
But yeah, I mean, land is land. That's not going to get cheaper. It's just going to get more and more scarce.
Yeah.
Cost of construction is not going down. We can't 3D print these things yet.
Yeah.
Soft costs. We can't expect, commissions and, all the surveyors and the architects and engineers and all that stuff to take pay cuts either. Government, are they gonna give us a break? Probably not.
Yeah.
So yeah, it's.
So
I always try to let people know, like, your resale, like buying something resale, not brand new, is actually really good value. You can give it a facelift. It's, whether it's a home or a condo, like, always look at what the rebuild cost would be and kind of do your math of, like, I couldn't rebuild it for this price, right? It's important.
Yeah. So I think if there's still anybody out there that is having the internal battle of, I want to buy a condo and what can I do? I mean, I think the argument is fairly clear in today's market. And so let's just hop into the condo numbers quickly. We don't even need to go through that. I think this is probably the more relevant slide, to be honest. So if we look at average price for CO1, so CO1 and CO8 comprise the bulk of the condos, like downtown condo inventory, right? And then we have W06, which is Mimico. So all 5 of these rings here are the most condo dense areas of Toronto, with the exception of C14, which I probably could have added in. But the one thing I think that's really important about this slide is to understand, like, where does the value lie, right? We can talk about numbers till we're blue in the face and what we think, but it's like, where are the opportunities, right? And so if I look at this and I go, cool, well, CO7, which is way up here, yes, it's on the subway line, but it's still not right downtown, is average price of 778 with a median price of 741. Okay, not terrible. We look at W06 and we go, cool, average price, again, great lifestyle neighborhood. Kind of sucks to get downtown. There's no direct transit. It's great if you drive. It's only like a 10 to 15 minute drive if you drive, but it's probably in over an hour to get downtown by transit. So not as easily accessible. Average price is
monthly price of a parking spot can be like, oh my gosh, expensive.
The parking out here is oftentimes more expensive than downtown. So you're correct. Like, even to just rent out here is actually more expensive than here, which is funny that you say that. So we go, cool, average price is $798 with a median price of $740. Okay, why would you pay more to live out here than and I know there's maybe some unsavory neighborhoods, but there are still some great neighborhoods in CO8. CO8's median price and average price currently is less than median price and average price of Mimico. And it is lower than the median price for North York at this point in time. So if you're looking like, hey, where is it, great opportunity for me to potentially purchase? Like, there's some good opportunities downtown right now. Like, there's some fantastic opportunities downtown right now. And then we look at kind of this area, which is Scarborough Town Center, which is right on the subway line as well. So it's, you know, relatively easy access to get downtown. And you're looking at being able to get, you know, get into that market for 600 grand. Like, it's not terrible in Toronto to be able to get downtown in half an hour on the subway. So for anybody that's kind of an entry level purchaser, I still think, you know, entry level is still somewhat competitive in Toronto. It's not where it was, but it's not like, you know, a $3 million condo or a $3 million property where you have less buyers. There's still people's desire to own a property in Toronto has not gone away. It's the fear that has increased to kind of delay that process potentially for people, right? So if you're looking to potentially get into the Toronto market, here are some, you know, more affordable ways to potentially do so, right? And then again, to just reiterate my earlier point of not rushing into anything, the green line here is 0 to 7 days on market, so new inventory. Yellow is, you know, 30 days on market, 7 to 30 or 8 to 30 days on market basically. And then orange is how much inventory is sitting around. And so you can continue to see, like, there is, unless it's a triple A property that you cannot replicate, like an amazing view, got some unbelievable terrace, and you really value that with like a barbecue, you know what I mean? Something very rare. I don't think there's too much urgency for you to rush out there and buy, you know, 0 to 7 days on market, because you can see that the bulk of it is continuously sitting around. And so this area is where you can probably start to find some sweet deals, right? So don't just look at the new stuff that's on market. The real deals are found with, you know, the guys who are, you know, 20, 25 days on market. That's where people as a seller start to get nervous. They're like, okay, I got to do something here. I got to change something up. So look at those. If your budget is 550, then look at people who are on the market at 575 for 20 days plus, because those are the people you can probably negotiate with, right? So there's just a little secret hack for you guys to potentially find more inventory. If you're in a lower inventory market, go up in terms of price point with longer days on market.
So important, right? People don't, the average Joe doesn't have access to these kinds of stats.
Totally.
You know, and even most realtors aren't going this deep. So great that people are learning here from Emma, because this is important.
Totally. So I think this is something that I've tracked for, I don't know, 18 months now, for just rental properties. So this is just to kind of keep things as fair as possible. 1 bedroom plus den rental units in the waterfront community downtown. They have to have a balcony, and they have to have parking. They have to be over 500 square feet, just so we don't have too much data or too much variance in terms of the data that we're presenting. And so if we look at April numbers, there were a total of 87 that were rented, and it was at $25.50, right? May, we've gone up to $25.88. So we're almost at $2,600 a month for a 1 bedroom plus den condo, where if you actually scrolled back to when we started doing these videos, it's probably like 2,200, 2,250 maybe. And you can see that the days on market have gone from 14 to 11. So these things are renting at a higher price and more quickly, right? And that kind of brings me to what, you know, Kory had kind of alluded to before. And it's, you know, you're going to get the bears in the comments here who are like, realtor recommending that you buy real estate in a market slowdown and blah, blah, blah. But like, I want to just say, life does not stop because the market slows down. You know, your landlord decides that they want to sell the property to extract some cash because they want to invest in something else. And all of a sudden, life throws a wrench at you and you're like, oh shit, what am I going to do next? Or you get a divorce. A recession doesn't care if you get a divorce. If you hate each other, you don't want to live together. So like, life always comes as a higher priority than anything else that's happening in the marketplace. And so you can be a bear in the comments and say you shouldn't, but you need to know all the options because life happens, right? And so if life is happening to you, I'm not making a recommendation for you to make any type of move if you don't want to make a move, but this information is for people who don't have another choice. They have something happening in their life and they need to make a choice. And one of those things is for people who are renting right now, because one of the conversations that we've had a lot is like, I'm renting, I need to move, maybe my landlord sold and I'm going to be forced to go to another property, right? Okay, but I've been saving and I've been wanting to buy a property for so long. Should I just go and rent something else, or should I actually consider buying? If we look at June, I think actually the more important thing would be to look at February. And so I tried to pull data from like inter-building and tried to keep this as similar as I can, right? So this is in 85, so this is in Liberty Village, and this was February, and this was February as well. This sold for $933,000, okay? And it's 700 square feet, and this one's about the same, both with parking and both with a locker. If you assume a 20% down payment at the rates at that point in time, which were 2.5%, that's what you could have got it as a fixed rate. And we take into consideration their taxes and their maintenance fees. So we go, cool, the carrying cost would be $4,000 a month for this property at a 2.5% rate. And your rent's $2,450 a month. There's a $1,600 gap between rent and renting and ownership. That's substantial. Like that $1,600 is a lot of money every month for you to be like, okay, I think the argument is there for me to rent at this point, right?
Yeah,
and if you look at today's numbers, so the rental differential on 25 years is $1,600 and 30 years is $1,200. That's a decent enough gap for me to say, okay, well, yeah, renting, like tick to renting. June, you're looking at this and you go, cool, this is in the same building. This one's slightly smaller, but again, I'm still going to give it a check mark because you actually own the thing. Neither of these actually have parking. Both of them have a locker. This one says it has parking, but it's a rental parking, and it would cost you another $175 a month, right? The carrying costs are $41.43 a month for 25 years, and this is assuming a fixed rate at 4.5. So that's like today's rate, right? And $3,800 on a 30-year amortization. The gap is like literally almost cut in half from February to today in terms of buying to renting, because rental rates have skyrocketed so quickly in Toronto. Like I'm talking some of the agents on my team that are focusing on rentals, like 13 offers, 8 offers on a rental. People putting in offers like without seeing the property at all. I don't care. I'll pay you a year up front. Like I don't see that like ending anytime in the next couple of months, to be very honest with you. And so if you're in a position where you are like, I need to move, I hate my rental or my landlord selling, and you're actually sitting on some cash for a down payment and you've been thinking about it, like actually think about this though. Because the numbers, the case for ownership versus rental is slightly stronger now than what it actually was before, even though the media says the worst time, don't buy anything, blah, blah. They're not taking into consideration all of your additional costs that you have on a day-to-day basis, renting as well. It's got pretty bad for renters.
Yeah, I think lots of times when they write those articles, they're not really considering the value that condos have, as your entry into the real estate market of owning something and not paying a landlord for the money. And what's going to happen as all those freehold homes become more expensive, like we're going to be creating more renters, and it will drive up, I think rents will still stay strong and hold their own for sure in the future. And typically during, challenging economic times, rents don't go down. They actually like hold steady or they go up, right? So I think Emma has a great point here that if you're ever considering it and you got the cash on the sideline, you see yourself being secure and stable and not wanting to go anywhere and just put your head down and work and enjoy Toronto, then don't be afraid to shoot your shot.
Yeah, again, like there's a lot of arguments to be made for and against. You got to do your own research. Nobody's telling you what to do. Do your own research. But if you have a stable job and you're comfortable making the payments, or you're comfortable renting it out, if renting out the second bedroom or whatever it happens to be, just know, like, you don't have to make a move, but like at least do the research. Like give yourself do yourself the service of actually doing the research is what I would say. And so I guess just to kind of wrap it up here, a few like very critical reminders in this changing time is My shirt actually says it, which is funny. But time in the market is more importantly than timing the market. Everybody today is trying to time the market. When this happens, I'm going to do this. When this happens, I'm going to do this. If I could get this for this, it's like find AAA solid real estate. If you can, and this goes to this third point, solid quality real estate will win long term. If you can buy AAA real estate at a discount, it's very unusual. It is not typical. Look for AAA real estate, things that you probably couldn't have purchased, better school districts, amazing lot, a better lot size, better floor plans and layouts that don't need as much work. Like all of these kind of things come into factor there. And then like Kory said before, have a plan B. If you're going to buy something, the question is in everybody's mind, am I going to be able to afford this? What if I lose my job? What if this happens? What if that happens? A plan A is not enough. You got to know plan A, plan B, plan C, and you got to be okay with them. And if you're genuinely not okay with them, then maybe now is not the right time. But if you're okay with it and you're getting a great deal and you're getting solid quality real estate and you plan on holding that thing for a long period of time, there's opportunities out there.
Definitely. Well, boom, like lots of golden nuggets here today. And again, thanks everybody. If you watched right to the end here, you've got all the information. Make sure you're following Emma and I on Instagram, on YouTube, where there's going to be not just monthly content, but daily and weekly content here as well. So thanks so much for tuning in, everybody. And until next episode, we'll see you on the channel.